Software for a coaching practice gets picked at two levels: the category, then the vendor inside the category. This unit picks the category. Module 19 picks the vendor. Reverse the sequence and you end up with a tool that does not connect to your CPA or does not track the things your year-end needs tracked. 4 buckets carry the whole field. At the top sit the full-service platforms: QuickBooks Online and Xero, built to scale through contractors and sales tax. Below them sit Wave and FreshBooks, leaner alternatives priced for solo billing. A third bucket lives inside practice management platforms that bundle ledger functions alongside scheduling. Spreadsheets occupy the fourth slot, defensible early and expensive late. Vendor selection happens in Module 19. Right now, you pick a bucket. Full-service cloud platforms run feeds from every major bank, handle multiple currencies for international clients, plug in a separate payroll engine when staff appear, and open a portal for direct CPA login. The deeper feature set becomes mandatory the day you pay a contractor, register for sales tax, or sell a product alongside coaching. Until then, a solo practitioner buys depth nobody touches, paying for capacity held in reserve. Lightweight tools sit lower in the stack. Wave is free for accounting, with payment processing fees as its revenue model. FreshBooks leans invoicing heavy and is paid. Less depth than QBO or Xero. Lower overhead for a solo coach with simple books, no contractors, no sales tax exposure, and no immediate CPA login requirement. Honest trade-off for the right profile. Embedded in coaching platforms. Some practice management platforms bundle basic accounting alongside scheduling, payments, and client records. The convenience trade-off: switch platforms later because the coaching feature set stopped fitting, and your books may be platform locked. Worth knowing the export format before committing, because the day you want out is the day that format matters most. Spreadsheets pass the test in a first calendar year at low transaction volumes. 3 trigger events end that defense. The first contractor check goes out, a state sales tax registration lands, or a CPA asks for direct file access. Pick a transition date the day you open the workbook. Watching for triggers beats discovering at year end that the workbook has stopped being honest. 4 questions decide the category. Does the platform open a direct portal for the CPA, or does it force PDF exports through email? Does the bank feed land automatically, or does every line get typed manually? Does the ledger group payments by vendor for 1099 NEC season? Does it generate 4 standard reports on demand: profit and loss monthly, profit and loss by category, balance sheet, and a transaction register? Pass all 4 and the bucket fits. Picture 2 practitioners. The first runs solo one-on-one, around 50 entries a month, no contractor checks, no online courses, and a CPA already logged into QuickBooks Online. Simple Start covers her completely. The second runs cohort programs, pays 3 subcontractors, sells a course with tax exposure in 2 states, and travels to conferences. Her profile needs essentials or zero. Requirements drove each outcome, never the marketing brochure. Stop here. Open the software requirements worksheet before going further. 4 questions live on that page. Which platform does the CPA prefer? What is the monthly transaction count? Are contractor checks part of operations? Does the practice register anywhere for tax? Answer those and a single bucket falls out automatically. Module 19 then picks the brand. and the order of operations holds.